Now, if you're a stock market investor closely looking at investing in foreign listed equities, then you're probably tracking the developments in China right now and tracking them very closely. So if you've been unable to complete your research because of the celebrations of the new year, don't worry, we've got you covered. So these Chinese stocks that we are talking about, they ended 2022 in the red. This is the third successive year that the Hang Seng index has ended the year lower. But quite frankly, things are looking up from here. If analysts, the ones that we've been looking at, if they are to be believed, then things are changing for the better. Because the main factors that analysts are looking at, they believe it's going to aid Chinese equities. And these factors are the government's economic revival plans, their efforts to revive their ailing property market, and relatively cheap valuations right now, which make investments into China more favorable than most emerging and developed markets. Credit Suisse has been the latest to upgrade Chinese equities. It went from neutral on China to overweight. Other analysts say that the rising infections in China may disrupt economic activity in the short term, but they too suggest a buy on dips. That practice would reward investors handsomely going ahead. While China's relative valuation within emerging and developed markets looks quite attractive, its current valuation compared to its historic valuation makes it yet another factor that could favor the bulls. Analysts are expecting China's loose monetary policy to favor the bulls at a time when central banks around most parts of the world are still hawkish. But does that mean it's all smooth sailing if you were to enter the Chinese market right now? Well, there's a reason that Chinese equities have not done well over the years. It is Xi Jinping's policies and, of course, his political ambitions which have made the market riskier for foreign investors. Another major factor, of course, to watch out for is the state of the property sector in China, which is yet to show those signs of revival. The real estate industry, so to speak, is especially important for China because that's the industry that contributes a major share of Chinese GDP. To make things worse right now, there are several developers who are sitting on huge debt piles which could blow up if the country's recent real estate plans fail to revive the sector.